So, guys, in the meantime, let me take a moment to introduce Sandeep. Sandeep is a full-time stock market trader. If you talk about the year since 2016, although he had entered the market in the year 2013-14, but you can say from 2016 onwards, things have started to be like on more serious note. And as we all know, he's a very strong proponent of the accumulation and distribution method, so which we will be discussing during the course of this session. And by profession, he's a mechanical engineer, and good to see so many engineers coming to investing fraternity. And guys, I see two three requests at this point in time, so I won't be able to take these requests initially. I have a set of questions initially, say 10-15 minutes, and then I'll approve. And in case I approve, I request you all to keep on mute so as not to disturb the voice quality. So, welcome, Sandeep. Any opening note from your side, and what our attendees can expect from today's session?
Sure. Thank you, Prince. So, in today's session, we'll be covering how exactly this accumulation and distribution thing works. Like, as a retail investor, how can we know whether we are in the accumulation phase or we are in the distribution phase, or what exactly is happening in the market, right? And after that, we can also discuss about which sectors are kind of looking good as of now, as per the data, right? And also any other not directly stock specific but maybe sector specific. If I am seeing accumulation, you guys can ask me and I shall be able to reply to those queries as well, Prince.
Great, great. So, Sandeep, we also have Shashank and Vajpayee with us. They also have a good sense of technical, so I expect a good set of questions from them also. But again, let
Sure.
me throw a question like how it all started for you and how had been your journey so far.
Okay, so like any other retail investor, right? Once you start earning, you have colleagues around you who are kind of investing, and they tell you, "Isme paisa dalo, paisa banega," and all of that. So the same way started for me as well in 2013. 14, wherein I just bought some stocks, few went up, few went down. And then after a certain point, since I'm from a middle class family, right? Like most of the middle class families, you have that mentality ki market chata bazaar hai, and you only end up losing money there, right? So that was the thing until 2015, where I met a colleague who kind of showed me the money control app. And then he pointed at, okay, this is the EPS, this is the PE, and this is what you have to look for before investing. And then it started to make sense that, okay, this is not completely a satta bazaar. And if you kind of study and invest, you will make money, because that guy showed me his portfolio. He was making money, right? So that kind of gave me a confidence, and I started reading books. And to be honest, never want to be a full time stock market investor. It just happened that way in 2016. As you guys know, we were in the midst of a crazy bull run that happened for 2 years, right? 2016 and 17. So at that point, whatever stock you buy, you kind of made 20, 30, 50, even 100% in a matter of few months. So during that time, I made crazy money. So my first stock, Prince, it was Kakatia Cement and Sugar. And that, in a period of 1.5 months, that kind of doubled. And since I was knowing very little about the markets, what happened was I put all my money in just one stock, right? And that kind of doubled. So I took out my capital from there. Then I bet on Upper Ganges, and there was another stock called Dwarkesh. That Dwarkesh is still there. Upper Ganges, they have broken it down into Awadh and Magad Sugar. So that kind of went up 60% in 3 days. That is the Upper Ganges one, right? So there I started to feel that I know everything about the markets, and markets are very easy, right? So it was that kind of a market where I made, to be honest, some 300 400% on my whole capital. So that kind of gave me a sense of this thing that, okay, I don't have to go back to the working life again, and I can just continue doing this. But then the 2018 crash happened, and any of you who are a mid or a small cap investor, you know how painful those 2 years were, especially the 18 and 19. And that is when I kind of took it seriously. Okay, now I have to learn technicals as well. Before that, I was just a fundamental investor looking at the EPS growth, the company's balance sheet, the company's financial ratios, and trying to figure out, okay, this company is going to be here in the next 1 or 2 years, and I should be investing now because it is cheap. But the whole thing changed when I read this book called as How to Trade in Stocks by Jesse Livermore. Although he doesn't talk much about technicals, right? He kind of tells you how the mindset should be of a trader, right? And that kind of changed my perspective again against this trading thing. And then I started to learn candlesticks. I started to look at the volumes. I started to look at the charts, right? And then kind of doing back testing. That is when I was able to kind of figure out, okay, this is how the accumulation and distribution takes place, especially in the small and mid caps. And if a retail investor kind of figures that out, it would be very easy for him to just ride along with those big guys and make money. So the actually I
Great,
was
great.
never
That
into
is an
teaching,
interesting.
Prince. So uh, what happened was, once COVID hit, a few of my friends, like very close friends, they were sitting at home and they said, okay, teach us also how you're doing this, right? And that is how it started. I made a course for them, I taught them. And then there's one student who was kind of following me from the money control days, wherein I was talking about something like V2 retail, which went up from 60 to 500 in a matter of a year or year and a half, right? So that guy said, I see you tweeting about accumulation and all. Can you teach me this thing as well? So I said, let me think about it. And that guy said, okay, send me your bank details, because I don't stay in India. I need to first, uh, I mean, feed it in my account. And then whenever you start, I'll send it. And that guy, what he did, Prince, is he sent me amount. He just asked me what would be approximately the course fees, and then he just sent it to me. And he was like, whenever you start, make sure I am your first student. And that is how the whole teaching thing started. So my very first batch was just hardly 4 students who wanted to learn this. And that is how I'm almost 800 odd students I have as of today. So that has been my journey so far in the markets, Prince.
That's really great, Sandeep, and wish that 800 count may go to 8,000 or 80,000 and many more zeros on the right and the side. So Sandeep, that's really
Yeah.
great to hear from you. And right, so the technical thing you started in the year 2019 seriously, right? And you primarily focused on the
Right.
accumulation and distribution thing. But like before that,
Right. So
yeah, yeah,
that is when I started looking at charts, because until then I didn't know what are these green and red bars, right? So once you go through the book, right, he talks about the price action and all of that. So that is when, and then I thought, which is the best indicator for price movement, right? And the thing popped out that these Japanese candlesticks are the best one. So I kind of studied the Japanese candlesticks. And then came the volumes. Although many people don't use the volumes so much, but volumes is one very main indicator for me. And that is how it started. It was not like all of a sudden I was able to pick it up, Prince. It was more of a trial and error, and finally I was able to crack how exactly this plays out.
that's superb. So, Sandeep, what is your process, as in, like, how you start where the screener thing, and basically how you generate the ideas, or how the approach, like you identify the sector first and then go for companies, or how
Right.
exactly you go about it?
Okay, so first, I'll talk a little about accumulation, like what exactly accumulation is, for people to know that what is accumulation in detail, right? So we'll start with that, Prince, if that's fine.
Yeah, yeah, great, great. Yeah, go ahead.
Yeah. So accumulation is basically whenever these big guys or smart money. So who exactly are these big guys or smart money? So these are your mutual fund guys, your PMS guys, your pension funds, institutions. All these institutions, when I say like insurance companies, they also directly buy stocks. So them, or else even other companies if they want to invest, right? So all that comes under smart money. So what they do, they have a set of people who kind of do their research, and then they say, okay, this is a great stock to buy. So once they buy, right, whatever they are buying, we call it as accumulation, right? So how can a retail investor get to know this, princess? Whenever big guys buy, right, there is a surge in volume, right? Because big guys don't go out there and, let's say, if they want to buy 10 lakh shares, prince, they will not go out there and buy 5,000 every day for, let's say, 2 3 months, right? Usually it is a few days of transaction. So that is when what happens usually is the volume surge, and usually the price will also start to inch up a little. So that is how we kind of figure out that, okay, this is accumulation that is happening in this particular stock. And if we are able to figure that out, we what we can do is we can just tag along with them and then make money. So what I have done is, I have taken a list of stocks, right, and segregated them based on their sectors, right? So, and I have set this filter like, so and so a volume. If the volume is greater than this particular level, then you know that there is some activity happening in that particular stock. So when I see a lot of stocks from a particular sector, prince, having pretty good volume, then you would come to know, okay, big guys are now interested in that particular stock. So this is how I have done it. Different, almost some 40 or 50 odd sectors, different sectors, and their stocks in that. And if those volumes pop up, right, from the past volumes, which were, let's say, the past volumes were 10,000, 10,000, 10,000, or somewhere like 10 to 20,000. Now all of a sudden you start seeing 50,000, 1 lakh volumes. You would come to know, prince, that okay, these big guys are interested in that stock, and you can concentrate on those, on that particular stock. And once you figure out that, okay, this is the sector, what I basically do is then go into detail, like, okay, which stock is doing capex, which stock is fundamentally good, having very good roc numbers, right? So based on that, I would finally finalize, okay, these are the stocks, and along with that, the technical should also be good, prince, right? Like, they should be inching upwards, the rsi should be greater than 50, you should have a bullish candlestick and all of that. So based on that, I would finally figure out, okay, these are the stocks I would play from this sector based on the accumulation that I have seen, and also the bullish technicals.
Yeah, Sandeep, I just have a
Yeah,
quick question. And firstly, I mean,
sure.
thanks for sharing all your knowledge, and whatever you're doing on Twitter is quite worth of appreciation. Um,
Thanks,
so my
Ashant. Yeah.
question is that this whole the biggest confusion in this accumulation
Hmm.
and this strategy is that when how to figure
Hmm.
out when it is an accumulation and when it's a distribution.
Right.
Generally, because what happens is, typically if you look at this, the stage three. So stage three,
Hmm.
some people would say it is an accumulation. Some people, argue it's a, distribution. So what are the,
All right.
what is the real, real way to figure this out? And my second question would be that in this whole idea of accumulation distribution, I know, Richard Wyckoff has done some work on it. And
Right.
where do you think the Indian market differs from, the generic accumulation and distribution rules?
Right. Yeah. So, coming to the first point, so like you mentioned, the stage wise analysis is very important, Shashank, to figure out whether in what phase we are in. Like Wyckoff talks about reaccumulation phase, like once the base is made, right? So for viewers, you can just read Profiting in Bull and Bear Market, right, from by Stan Weinstein, or you can read the Wyckoff theory, right, to understand the stage wise analysis. So usually what happens at the bottom, right, Shashank, if you look at the so we'll take into account the stage wise analysis by Stan Weinstein and then try to apply our method. So at the bottom, right, when it is kind of moving up and down on the 30 WMA, right? If you start seeing pretty high volume bars, that is when you'd come to know, Shashank, that okay, now we are in accumulation phase, and then the stock finally moves above the 30 WMA with a huge volume thing. right? It might, if you draw a trend line kind of a thing, it would be a breakout on that as well. So combining both of that, you'll know that okay, now it is clearly in stage 2, right? And then, like you said, the confusion is at the stage 3 point, because few people can't really make out okay whether it is kind of moving down or moving up. Basically what I've seen is a stock will spend maximum of 2 months, right? If it is in reaccumulation phase, Shashank, right? It won't spend more like 6 months going sideways, right? So if something is going sideways for let's say more than 2 3 4 months, right, you definitely know that okay, now it is actually in stage 3 and it is not really retesting the 30 wma line.
Right. So you basically take the duration part, right?
Right.
Like so
The
because
duration part.
yeah, yeah.
Along with that, Shank, you look at the global economy as well,
Mm,
like how well India is doing. And also, a very important one, which not many people talk about, is the interest rates,
mm,
right? So, if the interest rates start moving up, that is going to pull down the stock market eventually, right?
right.
So initial interest rate hikes will not have so much of an impact on the market, but the latter ones, right? Let's say now we have come from 4 to 6.25, right? Maybe after 5 or 5.5, it is going to start having an impact on the economy, on the demand, which would eventually make all those guys who had come into the stock market move away from the market and again happily invest in FDs, right? So if your inflation is less than 6% and you're getting some 7.5 8% on your FDs, you'll happily go back to keeping your money safe in the FDs, because anyways you would have made some 30 50 or 100 odd percent in the last 2 years from the market, right?
Mm,
So interest rate along with the duration, you would able to kind of figure it out, Shashank. Like not only the rates in India but even globally.
that's right.
No, as long as there is no hike in interest rates, you can happily stay invested in that stock and be very sure that this is still in stage 2 and still it is going to move up.
Right. So because what I personally also blend, one thing is that I add the Dow theory to it. Like for example, if there
Right?
is
Yeah.
a sign of accumulation, traded like
Hmm.
generally the Dow theory would be respected of making higher lows
Correct.
generally. So that's and in
Yeah.
a distribution phase, one thing is common is that you would have the lower
Lower
highs,
highs.
yeah, lower highs and
Yeah.
lower, yeah, that's right. So yeah, I
Co-
just blend
yeah.
that part and all. Yeah, and yeah, coming to the second
Yeah.
part,
So
yeah, go ahead.
even I use that,
Yeah.
Shashank, right? So even I use that, like whenever it is making a higher high and higher low, right? You continue to ride, I mean, ride the whole wave. You don't want to cut it short, right?
Right.
And it works much better if you use a kind of a weekly chart to do that. Many people do it on a daily and get stopped out. So if you use a weekly chart and use the Dow thing, right?
Mm,
It would work excellently well.
right, perfect. Yeah, and then the second question, how is the Indian market different from?
So in the Indian market, what exactly happens? I'll tell you. These in foreign markets, the retail investors can actually make the big guys also bleed sometimes, like what we saw in GameStop and all. Right, the big guys were heavily short on the particular stock, and these guys just kept on pumping it higher, and eventually the big guys made loss. Right, in Indian markets, why is it different? Is you can't short a stock, correct? In Indian, this thing, it is not allowed to carry a short position in equity, although you can do it in futures. But in futures, you only have the large cap stocks, right?
Mm,
So that is one reason wherein it differs. You won't be able to exactly figure out. And also in India, the operators are kind of very strong. Sometimes they will give you a shakeout. So what I generally do, like let's say if there is a big volume thing kind of happening at let's say $100, right, and it goes up to 110, and there you don't see any volume, but all of a sudden the stock drops below let's say 100. Many people will panic and they kind of sell it off, right? But I would know that okay, if a big guy with such a volume has bought stocks at this particular level, he is not going to sell it at a lower price, especially the big guys, right? You if you see 99% of the big guys always end up making money. It's always the retail who kind of lose money in the markets, right? So with that thing, you would be, I mean, it is a little different, since the big guys, especially the FIIs, if you look at them, they would largely play in the larger mid cap stocks. In small caps, very few FIIs play. So in India, the smaller and, let's say, most of the mid caps are only run by domestic money and a lot of operator activity, right? So that is how it differs. Like, not many institutional or the foreigners are playing in the smaller this thing. So if you so it becomes very easy for the operator to kind of manipulate. Sometimes they can make a stop drop just so that your stop loss would be taken out and you end up selling it, and they again buy at lower levels and start pushing it higher, Shashank. So this manipulation happens in most of the micro caps, small caps, and even the mid caps in India.
Right. That answers. Thanks a lot, Sandeep.
Yes, sir.
Thanks, Shashank. Will come to you again. So in between, Sandeep, we take question from Amit and SJ. So Amit, you can unmute and go first. Amit, you can unmute and ask your question. Okay. S.
Hello.
Okay. Yeah.
Hi, Sandeep.
Hi, Amit.
So, how can we identify the upcoming sectors where can we sell up more?
Yeah. So, Amit, usually what happens first, we'll try to understand the types of smart money, right? So, not every smart money that comes in and buys a particular stock, right? They would want to make gains in the next 1 or 2 weeks, right? Sometimes what happens, you would see high volumes and then still the stock keeps moving sideways. So usually what happens, there are two kinds of smart money. First is ones who are looking for quick short term gains, and others who are okay staying with the stock for medium to long term, right? So those guys don't have the urge to start pushing the stock immediately, right? When I say medium to long term guys, so you have pension funds who invest in India for the let's say next 5 or 10 years, and you have long only funds, you have many of these mutual funds, right, which want to keep money in a particular stock for a let's say few years kind of time frame, because now that there is a difference between short term gains and long term gains, they want to book long term gains in that, which is lesser than the short term by 5%, right? So sometimes it tests patience. If it is a long term guy who is getting into a stock, usually in such a stock, what you'll see is, even though the volumes are high, the stock does not really start moving up. It might be range bound for some time, but it does not start moving up immediately. Whereas if it is a, let's say, these overnight funds, liquid funds, or even many of these PMS guys. So in PMS, what happens, the more money you make for your client, the more money you will also make, right? So that is why what they'll do is, such guys, whenever they start buying a particular stock, you'll see the stock usually start responding, that is inching up in a week or maximum 2 3 weeks, right? So usually what I do is, if the stock is kind of having a continuous high volume thing for a pretty long time, and without a movement, I would know that, okay, this is more like a medium term kind of a player getting into a stock, or even long term guys. So in such a case, you would want to rely more on fundamentals, Amit, right? If it is something like, okay, you started seeing higher volumes and the stock also starts jumping up, right? Like in most of your PSU banking stocks, what you saw, the stock breaking out and then high volumes continuously moving up. So it might be these short term players who are just trying to make quick money and get out of those stocks, right? And how do I get to know which sector is going to do well is based on which sector, how many stocks from which sector are having those volume shockers, or volumes are going up in those particular sectors. I mean, and you want to know which ones will do good from now, or was it more of a general question?
From now also,
Okay, so from now, what I'm seeing is chemicals as a sector is having pretty high volumes, most of those stocks. So I feel because of the whole China COVID thing that is happening, I feel the chemical prices have again started inching up, maybe because of that. Usually what happens, Amit, it is very difficult to connect the dots looking forward, because now I would be seeing accumulation happening in those particular stocks, but as of now there won't be any news. But let's say 2 weeks, 3 weeks from now, all of a sudden the news comes in and you would say, okay, this is what the big guys already knew, and because of that they were buying much before the retail is buying. So usually 90% of the times what I've seen is the big guys buy in first, right? And once you start seeing the news hitting the market, usually they start getting out because they would have already made that 15, 20, 25%, Amit, right? Like many times we kind of buy stocks on results, right? Very strong set of results the company posts and we go out there and buy a stock. 10 days from that you'd say that why is the stock going down? It gave such strong results, but the stock price is coming down. What is wrong with the company, right? So what would have happened is the big guys or the insiders or these operators, they would have already known that okay, this is the result the stock is going to post, or the product that the company is selling, the price has already started moving up. So they start taking a position much before the news is out in the market. And once the news is out, it is usually these guys kind of dumping it back to the retail. So that is why tell most of the people, right, never buy something on news. So once you buy something on news, usually in a day or two, these guys would end up selling their stuff and getting out of that stock. So either have a system to know that okay, there is high volumes happening in this sector and this should do well in the coming days, and take a position with them, or else after some news is out there, there is no point buying something because everyone knows that story. So if everyone knows that story and everyone is buying, then who is selling it and pushing the stock price down, right? So even if everyone is buying and the stock price is going down, you would know that okay, the retail is buying, the big guys are just getting out of that stock.
Right. So, SJ, now you can unmute and ask your question. SJ, you can unmute and ask your question. Okay, anyway.
अच्छा, इन द मीन टाइम प्रिंस जी, जरा सा मैं थोड़ा सा संदीप जी से कुछ जानना चाहूंगा। तो संदीप जी, जैसे अभी आपने काफी अच्छा डिटेल में बताया वॉल्यूम के संबंध में, तो मैं रिसेंट एग्जांपल जैसे अभी जो हुआ है पिछले वीक में, इसके संबंध में थोड़ा सा मैं आपसे चाहूंगा कि जरा सा बताएंगे तो शायद और लिसनर को समझ में आएगा अच्छे से। जैसे मगध शुगर या शुगर सेक्टर था, मतलब लास्ट वीक में मंडे से पहले, मैंने फ्राइडे के दिन शुगर सेक्टर में एक वॉल्यूम थोड़ा सा बेहतर जनरेट हुआ। देन मंडे को बहुत ही हाईएस्ट वॉल्यूम है और हाईएस्ट वॉल्यूम पर हाई प्राइस बना। तो इसको आप किस रूप में देखेंगे कि मतलब यहाँ पर इनसाइडर ने प्रॉफिट बुक कर लिया या कि
हाँ जी, तो वो कैसा पता चलेगा? मतलब आप डेली इस पे कैंडल स्टिक देखोगे ना, अगर हाई वॉल्यूम पे बेरिश कैंडल बन रहा है सर, तो मतलब आपको पता है कि यहाँ पे मतलब उल्टा सेलिंग आ रहा है, राइट?
नहीं, बेरिश नहीं बनी ना संदीप जी। देखिए 19 तारीख को आपका जो, जैसे मगध शुगर की अभी आपने बात करी थी, तो मगध शुगर में 358-80 का हाई बनाया और 350 या 40 के आसपास बंद हुआ। मतलब अच्छा खासा ग्रीन कैंडल ही बनी थी, ये बात सर विक थी उसमें ऊपर में, बट फुल बॉडी कैंडल अच्छी खासी, मतलब पिछली कैंडल से काफी ऊपर बनी थी। बट नेक्स्ट डे से वो फॉल होना शुरू हो गया और सीधा 284 पे जाके रुका। तो मेरा खाली इतना कहना था कि जो अन्ना कॉलिंग ने अपनी बुक में जिस प्रकार से एक्युमुलेशन और डिस्ट्रीब्यूशन को इनसाइडर के पॉइंट ऑफ व्यू से जो डिस्क्राइब किया है, तो उससे आप कुछ सहमत हैं कि पहले एक्युमुलेशन हो गया और उनको इस बात का आइडिया था कि कोई खबर आने वाली है, और जैसे खबर आने वाली हुई उसके पहले वो थोड़ा सा वॉल्यूम बढ़ाया और खबर जिस दिन डिस्क्लोज हुई उस दिन उन्होंने हैवी वॉल्यूम के साथ में बढ़ा के उसको सेल कर दिया।
करेक्ट। सो तो वो हमको पता कैसे चलेगा सर कि मतलब उसके अगले दिन आप देखेंगे, मैं भी मगध शुगर का चार्ट लेके बैठा हूं, तो अगले दिन वो ये बना है, उसको हम बेरिश हरामी पैटर्न बोलते हैं, जहां पे बड़े कैंडल के अंदर में ही एक छोटा कैंडल बना है, राइट? सो वो जो प्राइस रिजेक्शन हुआ है ना वहां पे, उससे हमको पता चलेगा सर कि पिछले दिन जो इन्होंने उठाया था, शायद वो सभी सेलिंग वॉल्यूम था और उसके बाद प्राइस रिजेक्शन होना स्टार्ट किया, तो उसी दिन हम अपना प्रॉफिट बुक करके बाहर आ जाएंगे उससे। और उसके बाद स्टॉक 200 285 तक चला गया है, राइट। सो हम 335 के आसपास ही उसको बुक कर लेते।
हाँ, तो मतलब कहने का तात्पर्य हुआ ये जो वॉल्यूम जनरेट हुआ और उसके अगले दिन जो हमें कैंडल बनी, रेड कैंडल मिली, तो वो हमको एक इंडिकेट करती है कि ये वॉल्यूम बाइंग का ना होके सेलिंग करा होगा, है ना?
सर, राइट।
राइट। तो इसको इसको इस तरह से भी कोरिलेट कर सकते हैं, जैसे अन्ना कॉलिन ने लिखा कि जब भी कोई न्यूज आती है तो उसको इनसाइडर्स बहुत ही अच्छी तरीके से मैनिपुलेट करके और उसको इतना प्रचारित करते हैं कि हर आदमी उसमें बाय करने के लिए टेम्पटेशन
बाय करने, हाँ
उसको
जी।
हो जाए।
और सिर्फ सिर्फ इनसाइडर नहीं सर, पूरा आप हर कोई टीवी चैनल लगाएंगे ना, तो हर कोई टीवी चैनल भी वही दिखाएगा आपको कि शुगर सेक्टर तेजी में है, बाय कर लो, ये अच्छा न्यूज आया है,
हाँ,
राइट।
वो
सो
तो
उसके
उन्होंने
वजह,
कहा ही है, वो तो अन्ना कॉलिन ने कहा है कि पूरा मीडिया, प्रिंट मीडिया और टीवी सारे ही उसमें मतलब इन्वॉल्व हो जाते हैं, इंक्लूड हो जाते हैं। इन्वॉल्व नहीं
बराबर
कहेंगे,
सर,
मतलब चूंकि न्यूज आई तो न्यूज तो प्रचारित होगी, स्वाभाविक सी बात है। अब उस
करेक्ट,
न्यूज को किस रूप में लेना है और
राइट,
किस, तो आपके मतलब ये जो आपने बताया इससे थोड़ा सा ये समझ में आना चाहिए सभी लोगों को कि जो बहुत हाई वॉल्यूम है
हाँ जी,
उसको मतलब दो सस्पिशन से भी देखना चाहिए, संदेह की निगाह से भी, और फॉलो अप के
राइट,
बिना उसमें बाइंग नहीं करनी चाहिए। क्या आपका इसमें ओपिनियन है?
करेक्ट सर।
Right,
मतलब
right, right.
इसमें वो आप देखोगे ना, तो मान लीजिए वो ब्रेकआउट हो चुका है, तो इधर आप ब्रेकआउट रीटेस्ट के लिए वेट कीजिए, राइट। नहीं तो उसमें खेलिए ही मत। जब ऑलरेडी वो 20-30% भाग चुका है, आप क्यों आपका ये मतलब रिस्क लेके वहां पे बाय करना चाहिए आपको, मतलब 10-15% वो रीटेस्ट लेवल से ऊपर में, राइट। और जब वो रीटेस्ट लेवल पे वापस आएगा, तो लेट इट नॉट क्लोज बिलो दैट रीटेस्ट लेवल, जो आपको कंफर्म होगा कि इसमें अभी भी तेजी बनी हुई है और स्टॉक अभी भी ऊपर जाने वाली है। आप वही स्टॉक को अगर देखोगे तो नेक्स्ट डे क्या हुआ है, वो रिटेस्ट लेवल पे उसको मतलब तोड़ के नीचे ही क्लोज हुआ है उससे, राइट। डेली चार्ट पे अगर आप देखोगे, तो वहां से बिल्कुल पता चल जाएगा कि इसमें बाय करना इट इज नॉट रियली एडवाइजेबल थिंग।
Right, Sandeep, right. So, Sandeep,
या
like you talked about the screening criteria on the basis of volume. So your query only contain volume, or you also include something else like moving averages or kind of. So, what if
So,
you would
so
like to comment?
volume is the main one, Prince. So once I start seeing very good volumes, right, then I do the stage-wise analysis of those particular charts, right? Whether it is in stage one or stage two, stage three, stage four, right? So for any retail investor, it's a must-read book. Like even if you play the market in stage two up to stage three, one can easily make something like even 100 or even 200 odd percent in a particular stock, right, in those 1 to 2 years of bull run, right. And once the trade stage 3 starts, right, a retail investor who has a job, right, he can just take his profits and step out of the market and wait for the next stage 2, that is after the stage 4 drop, right. Let it go into stage 1 and then start going into stage 2. So that is what I tell most of the retail investors, that since you are not full time into it, there is no need for you to continuously trade the market, right. When you know the stock is in stage 4, no point in trying to play them for those 10-15 points or 10-15 percentage jump. You can just let the stock go. Play those stocks which are in stage 2. Those have a better chance of moving up freely than something that is in stage 4 and is under heavy selling pressure.
Right, Sandeep. So basically, what we can understand from this is like keeping in accumulation stage can be an opportunity cost. Am I right on this, or you read it? Okay. So Sandeep, like if something came to your radar on the basis of your query which you ran, like volumes are
Mhm,
above a certain threshold, right? So what is
mhm.
the next process and how you finally decide when you enter and also, yeah.
So usually I make use of these weekly candlesticks, prints, right? So if the weekly candle that I see is, let's say, a reversal candle or a bullish continuation candle, and along with that RSI is very important for me. So RSI, if it is above 50 or 60, right, you would know that okay, there is momentum also building. Like I said, accumulation can be done by either the medium to long term guys or even the short term guys prints. So how do we differentiate between that is the technicals start looking bullish, right, if it is done by a short term guy. So that is when you also jump along with them, and make sure you also ride it as long as they push. And usually prince, what happens, they don't bet 10 crores, 20 crores, 50 crores for a 5% rally, right? They usually, in small and mid caps, what I've seen is the rallies, like even if you see the sugar stocks, it was more of a 20% or even higher than that kind of a rally, right? Usually it is about 10-15% kind of a rally that they play for, and then they start booking out from there. So technicals are very important, and on a weekly time frame prints for me to take a short term position in a particular stock once the accumulation is done.
Okay, so any other multi-time frame you use, or it's like only you see for weekly?
So only weekly is good enough for me. Along with that, the stage wise analysis, and also if I'm investing, I, or even sometimes trading, I use the relative strength indicator prints. So what one can do is look at the market cap of that particular stock, right? So you need not compare a small cap stock with the nifty, right? Because sometimes there can be a chance wherein the nifty is going up, small cap index is going down. So you want to compare the small cap stock with the small cap 100 index. So what you can do is make these indicators on trading view, which anyone can do. Just remove the comparison from nifty to the small cap 100 if it is a small cap stock, and if it is a mid cap stock, you compare it with the mid cap index, right? So then you will come to know that okay, is this particular stock outperforming the mid cap or the small cap index. So that would also give you kind of a conviction that okay, this one is going against the tide, right? So you would be able to make better profits in that particular stock.
Right, Sandeep. So, Sandeep, you only take long trades, or you also short at times when you see the structure is getting weak and
So I don't short them, because most of my thing is in the small and mid caps, right? And they are not really in the futures and options market. So I usually never short the market prints. It's only either I get in and the stock moves up, I make money, I get out of the stock, and then I'll just leave the stock aside and look for other opportunities. Never try to short the nifty and all of that.
okay. So, Sandeep, would you also like to touch upon the divergence we often see when the say RSI is saying something and the price movement is in a different direction? So, yeah.
Acha, so all my students here, they would know that this divergence thing I've never really believed in, Prince, because I have tried applying it a few times, but it never gave me satisfactory results. So that is why I rely more on the volume than the divergence. But one thing I've seen, if you are seeing divergence, right, make sure the candlestick is also reversing that, right? Unless there is a reversal on the candlesticks, right, let it be a daily chart or whatever time frame you use. Without a candlestick reversal, usually the this thing will fail. For example, let's say there is a bullish divergence prince. So what you would want to see is, okay, is the candlestick also showing me a reversal pattern, right? So if it is so, then it is one can go ahead and take a trade in that.
Right, right, fair enough. So, Sandeep, it's like the swing and positional trade you take. What's the normal duration you keep, or it all depends on the momentum and price action happening? So, how you go about it, and
So
additionally, like how you pyramid your position.
right. So usually what I've seen is sometimes depending on what kind of market we are in, Prince. So this is a very important concept which not many people talk about. Like during a bull market, your position will start running from the very first day you start buy it, right? But as we go into a more of a sideways market or a bear market, usually what happens, the duration might go, I mean, into a few weeks or sometimes even months. So this is something that I have seen, like in the bull market, hardly in 2 weeks you kind of make 10, 15, 20% kind of returns once you see higher volumes and you get out of that stock. In a sideways market, it might extend to, let's say, one odd month. And then in a bear market, sometimes it can be even a 2 month position that I take. So I just buy that stock and I sit, right? And sometimes, because these insiders can't really buy during the result season, right? So usually they do all this much before the results are out, right? And once the news hits the market, the stock just jumps 15, 20, 25%. And usually the day of the results or the good news, I book out, or the next day once I see the bearish candle on the daily chart.
Right, right. So I take one question from Zero Fly Helicam. So I wanted to know how the input cost are tracked, like RIL, Reliance purchased naphtha from Russia in huge quantity, but we
Mhm.
may not know the price.
Right. So we will not know it, Prince. Like a common retail investor, it is very difficult to know the chemical prices or any prices of these. Let's say graphite electrode prices are moving up. So we won't know unless you subscribe to those few websites that are there, right? It is very difficult for a retail investor to know it. But the big guys who are there in the market, like you have research analysts, right? So their job is solely to do that. So once they do their research and then once they start buying, then you'll see a volume shocker, right? That is when you would know that, okay, someone is interested in this stock. Let me try and figure out what is happening if you want to really invest. Or else, like I told, you just make use of the, once you see a volume shocker, you just make use of, okay, what is the candlestick looking like? If the candlestick is bullish on the weekly time frame, you'll just go out there and buy it and keep the swing low, that is the recent swing low, as a stop loss, Prince. Or let's say maximum 7% would be your stop loss that you would take and keep and take that position.
So Sandeep, even we were discussing same with Shashank and Ameya yesterday. So we all
Mhm.
have different kinds to trading or maybe swing trading. Then definitely emotions
Mhm.
and your behavior plays a very vital role. So like re-entering the same strong, say if
Right.
you have some identified a good trade and you entered and your stop loss got hit, you
Mhm.
cut it, right? At again you feel like the same
Right.
security is ready for next move. So you re-enter or how you go about it?
Yeah, so if it is just a trade, right, Prince, I would not really mix fundamentals with it. That is the, I will never mix stories with that, right? If it is purely, let's say, a medium term thing, like if you look at something like Deepak Fertilizers, it actually even broke the 30 WMA once and kind of went down around that 350 or 330 odd mark. And then from there, it directly went to 700, right? So if I know something is going to do well in the next 1 year, and I know the markets are going to be in a bull run because of the interest rates being at the same level and the liquidity is also good, I would not cut those positions. Right? If it is strictly a trade, Prince, I would just exit that and let that stock again come in my radar and I would trade it. Right? No attaching stories with those particular stocks or those companies. If it is purely on, let's say, medium term thing, I usually take those positions without a stop loss, which might be a little difficult for people to take, because unless you do that analysis, right, you won't have that thing to hold on to something if it is down by 10, 15, 20%, right? So I make sure, like, I have two different portfolios, Prince. One is purely for trading, wherein I make sure every trade is taken with a stop loss, and one is purely investing, wherein you usually buy the stage two kind of stocks and try to push play the whole wave until you see distribution finally happening. That is the stock moving sideways for a few months and then breaking the 30 WMA line.
Fair enough, fair enough. So Sandeep, when it comes to diversification or maybe
Mhm.
concentrated portfolio, how you manage about the risk thing and how many stocks you keep at one point in time?
So for investment purpose, like usually it is 50-50 prints, unless I see that okay, I can't really handle these emotions and the volatility is high. I might do a 70-30, that is 70 investing and 30 trading. But usually it is 50-50, right? If I'm not finding anything in investment, I will not shift the capital to trading and then try to take more trades, right? And what I do is generally 10 to 15 stocks is the max during investing or even trading prints, right? So let's say there are 15 stocks, so it is something like you are putting 7% in a stock, right, for every trade. Many people, why they go wrong, or let's say they believe in stories first thing, and the second thing is for one trade they put 50% capital allocation, and the other trade they put something like 5%, and the 50% wala goes down, let's say 20%, and your, even if your 5% wala stock goes up 50%, you would still end up making loss, right? So that is why choose a method and have equal allocations for all your trades, right? In such a scenario, if something goes up 50%, right, and if five fail and you have a 10% stop loss, usually it should be 7%. Even if you have, let's say, 10% stop loss, so for every one winner, you'll still be in breaking even if five are hitting your stop loss, right? So equal allocation, 10 stocks in case if you're not finding so many opportunities, but in case if you're finding a lot of opportunities, I would say 15. But going beyond that, let's say many people play 30-50 stocks, so that would only increase your screen time, like you have to go through all those charts and all of that, which might be difficult for a in retail investor who is also working, right? So high conviction stocks, 10 or 15 maximum.
Right. So, Shriram, you can unmute and ask your question. You have been waiting since long. Yeah, go ahead.
Hi, thank you, Prince. Sir, my question to Sandeep ji is, sir, you talked about this volumes in sector-wise. Is there any
Uh-huh.
particular in screener which you employ for this sector-wise volume growth, or you go individually for each of them?
So I go individually, sir. Like what I've done is based on which sector the stock belongs to, right? I have made a thing like, okay, these all stocks are in this particular sector, right? And if those stocks are having a volume surge, right, you would come to know, okay, there is something going on in that particular sector. So
You
it is
use
stock.
any sir indicator like a 52-week high or something like that, or some.
So 52-week high, that would only work if the stock is near the 52-week high, sir. What I've done is looking at, okay, what is the average of this particular stock? Like, what is the volume for the last, let's say, 100 odd days or 50 odd days? I made this thing like, okay, this stock usually has so and so volumes, right? So whenever it kind of crosses that, you would know that, okay, there is a volume jump in that particular stock. Or some of them have created it on, I think, charting also, wherein you can see, okay, which are the stocks that are having a surge in volume, right? So based on that, what you can do is take the list of all those stocks and try to know, okay, how many stocks of which sector are making it to the list.
Okay, okay, okay. Thank you, Sandeep ji.
Yeah,
Thanks.
thank you, sir.
So, Sandeep, share some view on the moving averages and like what's your buying point? Do you follow any specific moving average or how you go about it? And even there is question from Arun on this. What's buying point of invest?
Just based on the averages, Prince. So usually, moving averages is not a main trigger for me to buy something unless the stock is crossing the 30 WMA, that is 150 DMA. So the only after reading this book by Stan Weinstein, which was I think some 4, 5 or 6 months ago, I started using that, Prince. Earlier it was the 50 and 200 DMA for the golden cross and the death cross. So even that works really well. But after reading this stage wise analysis, I have been using the 30 WMA, and that is kind of giving me a very good signal. So usually what happens, once the stock retests the line, right there, if you start seeing a reversal candle, Prince, Okay, then it is an indication that okay, now it is time you can even average them up, right? Because the 30 WMA line would be continuously moving up, correct? So whenever the stock retraces and touches that line and gives you a reversal candle, it was continuously falling, and then it gives you a reversal candle, you would know that okay, now it is time that the price is telling us that the bulls are finally starting to push the stock up. Maybe it is taking support at the 30 WMA or 150 DMA, and the big guys are again buying it and pushing the stock up. So that is one indicator that I have started using recently. That is the 150 daily moving average or the 30 WMA. Both of them would be almost similar. They might be a 1 2 or a few rupees kind of a difference, because in 30 weeks if there are holidays, it is not going to consider those. But whereas if you take 150 days, so it is going to take the trading days, right? So it might be a little more than 30 weeks also sometimes.
Right, right. So Sandeep, any interesting sectors or maybe sub-sectors which you think can do well in coming days? And obviously, we are not here for any stock
Mhm.
specific talks, but again, any good
Right.
setup
Yeah.
which is good for study purpose, you can share. Yeah.
Sure. Yeah. So the pharmaceutical sector, Prince, especially the API makers, right? So I don't know whether you have covered this with other speakers, but I'll just share my point of view. So what is happening is the whole API manufacturing business worldwide is around $250 billion something, right? And uh, India makes hardly 30 billion out of that. China makes 200 billion, and I think Italy makes something like $10 billion, right? So this is something, this is a little complex, right? APIs is not something like where Bangladesh or Vietnam can tomorrow say, okay, we have cheap labor and we can start doing it, right? It does not work that way. So India lost its textile business to Vietnam, Bangladesh because of cheap labor. But in case of APIs, you can't really have that, because it is a very complex thing that they make, and you need to have US FDA approvals and all of that, right? What is happening is slowly these people are moving away from China, especially the European guys and even the US ones, right? Most of these guys want to make India their second partner, because of which, if you go through a lot of these API makers and also the proxy plays. So when I say proxy plays, so all these mines, right? That is two three are there. So the solvent that they make goes into making of API, right? So all such proxy plays, that is the chemicals guys who are directly supplying it to the API manufacturers, all of them should benefit. And the projection is that in the next 3 or maximum worst case scenario 4 years, the whole sector from 30 billion is going to become 60 billion. So if let's say that is the thing, then even something like a large cap like a Divis or even others, right? They can continue to grow at a rapid pace, because the whole sector itself is going to double, right? And if you are have that ability to spot very fundamentally good small cap or a micro cap stock, then definitely if the industry itself is doubling, these stocks can even go up 3 4 5 or even 10x also. So basically, what I look for in these companies is the capex that they are doing, Prince, right? Because many great companies, if they are not doing capex, then you are not going to see any earnings growth, neither the sales growth, right? So capex is very important for me, and along with that, the ROC, Prince. So if the company has hardly 5% ROC, it does not make sense, right? You kind of spend 100 rupees and make 5 rupees in return. But whereas you see another company making 25% ROC, that is, you put in 100 rupees in the company, 25% or 25 rupees it is going to throw back at you. So basically you look for high ROC companies which are doing capex as well, and along with that, if the company is having very good operating profit margin, right? Operating profit margin kind of tells you about the moat of the company as well. if the operating profit margin is, let's say, north of 20%, you would know that, okay, this company does not have so many competitors maybe, or it has some kind of a moat which is helping it have margins about 20%. Because let's say if we as a businessman talk, and if someone else has opened a store and he's making 25% on whatever he's selling, then you would be interested in opening that same kind of a business, right? If there are no much permissions required, you would just open it beside him, and you would also start making, maybe the profits are going to go down to 20%, but still 20% is very good. Looking at that, the third guy would also jump in. So usually in sectors where you see very strong competition, the operating profit margins are horrible, right? And the net profits that they make after all the interest costs and even the tax depreciation, it would be hardly anything, right? So these are the main three things that I look for. And I'm pretty bullish on the API sector, Prince. And then the chemical names, right? Because along with the APIs, even the chemical ones are going to benefit immensely. And also the IT sector, right? Many people are not really, they feel that the most of the IT run is over and all of that. I think yesterday Shashank touched upon that. But this is something that is going to grow in the coming, let's say, 5 or 10 years, because of digitalization. And all the Fortune 500 companies, they now know that, okay, it is high time they also digitalize and get into this one, right? So because of which the IT sector should continue to grow, irrespective of whether there is a slowdown. I think most of the slowdown is already priced in. Maybe one shocker we might have, wherein it just drops by 10-15%, and then from there the new IT bull run should start.
Great, great. We also have Shubham with us. So Shubham, Shashank, any question or any inputs over what we were discussing with Sandeep?
I
तो
think I think he
गुड
explained it
इवनिंग
brilliantly.
शशांक जी बोल रहे हैं क्या?
नहीं नहीं, शुभम, go ahead, go
अच्छा
ahead.
अच्छा
It was
अच्छा
a
अच्छा, नहीं
small
मुझे लगा
comment.
आप बोल रहे हैं, ठीक है।
Yeah.
अच्छा, तो
Hi
गुड इवनिंग
Shubham.
टू एवरीवन।
Yeah, good evening.
हाय 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 संदीप जी। तो संदीप जी को तो मैं काफी दिनों से फॉलो कर रहा हूँ, मेरे ख्याल से दिनों क्या साल हो गए होंगे, अब तो 1-1.5 साल से ऊपर हो गया। तो ही हैज बीन डूइंग वेरी गुड वर्क इन एक्यूमुलेशन डिस्ट्रीब्यूशन, ट्रैकिंग इंस्टीट्यूशनल मनी एंड डूइंग ऑल सॉर्ट ऑफ थिंग्स। सो ही मस्ट हैव इलैबोरेटेड ऑन ऑल these topics in a very detailed manner. I think स्पेस तो 8 बजे चालू हुआ था, मैं लेट ज्वाइन किया, तो 1 घंटा हो गया।
Yeah,
हाँ,
yeah,
तो
Shubham. Yeah.
काफी डिटेल में डिस्कशन हो गया होगा। तो ऐड करने के लिए तो कुछ है नहीं ऐसा कुछ।
Acha.
Okay, okay, Shubham, like when we keep continuing in between, if you have any pointers or maybe any question to Sandeep, we can.
हाँ, श्योर 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 श्योर।
So Shashank, you had something, you were to ask something to Sandeep, yeah.
I think this was not a question. I mean, it was generally, a comment specifically on the, when you look at the API data, and
Mm-hmm.
specifically the APIs and the chemicals and all. So do you see any specific areas where these could benefit, and especially talking on in terms of pharma, because in pharma sector there are certain companies in the generic side which are
Right.
catering to the US. They
Mm-hmm.
are like having a little bit of facing challenging times on their business
Right.
model, right?
Yeah.
So I'm like, I can share my view. My view is that, like, in pharma there would be very selectively things
Correct.
might move. So do you
True.
also see this thing in your analysis?
Yes. Yes. Basically what I'm seeing is not every stock that is, like you said, the generic ones, let's say there is an Abbott, right? So that might continue to grow at the same pace. Although the API industry is doubling, it might not really affect that particular stock, right? But in API itself, what I'm doing is trying to figure out, okay, which are the big API players, right? And are they doing pretty good capex as well? So if they're going to do capex, naturally their top line is going to grow, their bottom line is going to grow, and along with that, if they're having good ROCs, then naturally those API companies should do well. So what I've done is made a basket out of that, Shashank. Instead of, let's say, playing on let's the bigger ones, right? What I've done is a few large ones, a few mid cap names, a few small caps, and a very few micro cap names also I have taken position in to play the next 2 3 years until the whole sector itself doubles, right? So in that scenario, and same allocation would be also for the larger players, a little heavy allocation, and then as you go down for the micro caps, you don't want to really risk a lot, right? So that is how I'm playing the whole API, only the API, Shashank. I'm not looking at companies who are into, let's say, formulations, or they are making tablets or generics and selling it. Not that, only the
Only
API
API.
ones.
Okay. So just a
Yeah.
quick question here, since I mean, this accumulation is going on. So we do not
Mhm.
know when they would be done with their accumulation. So how do you allocate your capital in this case? Because I mean, do you wait for a long
All
time,
right.
or how do you do that?
So once I see that the sector, to be honest, it's been months now. There has been pretty decent accumulation in those ones, right? Most of these pharma names. So what I've done is, of the first tranche I have already bought it. Let's say if it gives me a dip, because looking at the whole global scenario also, Shashank, sometimes it is based on the experience, right? Like, that okay, markets are not really in a great shape, and you might get a one more dip. So waiting for that dip, I have kept some more money, which I would put it in those pharma names in case if I see a pretty decent cut. When I say pretty decent cut, it might be even a 10 15%. So I'm not trading them, so I don't have a stop loss there. I'm playing them more on the fundamentals, and I would average them. To be honest, 80% of the buying is almost done there. Hardly 20% I have cash in those stocks to average them if they end up going lower, right? But as per the recent report in November, the prices, or most of the pharma companies, did exceptionally well, is what I read recently. I'm not sure, I don't remember correctly, but that is what I read. And also with the whole COVID thing that is happening in China and even other countries, I feel these, especially the APIs, because since China sells almost 70% of the world's API, so if those that country is struggling, naturally most of the businesses will come to India, like how it happened during the whole COVID previous waves, right?
Right. No, I think I agree with you here, because I think the volume expansion has already started. With
Right.
most of these companies, they have, but it's just the question when the margins come in. So I think the
Correct.
the real trigger would be
Yeah. So,
that.
what happened was, with the war that happened, Shashank, most of these
Yeah.
chemical prices, they shot up like crazy, and because of that, many people thought that okay, the game is over for pharma because the margins have dropped and all of that. But slowly, I think most of the management commentary that I'm hearing from Q3. They should be able to clear out all those. I mean, the input costs which they bought during the war time, right? So from Q4 you should start seeing very good results, or even from Q3 also, many of them should start giving you very good operating profit margins and all of that.
Perfect. Yeah.
Great.
Thank you.
And to the attendees, you must be enjoying this great session. You can reciprocate by giving a follow to the guests. And if you're liking our work, you can also follow me so that more listeners and more quality content can reach more people. Sandeep, there could be occasions
Mhm.
when the smart money, the types of smart money you discuss, the one which is invested for a shorter period and longer period, right? There could be
Right.
occasions like in some script, both may enter at any point in time. So
Correct.
is there any segregation which can be made, or how we
So
can read these on chart transactions? Yeah.
yeah, so usually what I'm seeing is, if it is a short term kind of a guy, right, usually the stock goes up and it comes back at the same level, right? In case if the stock starts making a higher high, like what Shashank was talking about, right, the Dow theory. So if it starts making a higher high, Prince, you would also come to know, okay, maybe there was a short term guy as well as a medium to long term guy.
Right. So there is one question from what's name? Naimuddin. So he's asking, does valuation play any role in buying the, I mean, security on the basis of chart movements or? So basically,
Uh,
he wanted to ask, do you see the valuations
the
of a stock?
valuation. Yeah, so I do, Prince. So what happens is, let's say there is a 10 PE stock, like you had Madras Fertilizer recently, right, which made a kind of a 52-week high. Because the PE was kind of 6 or something, it went up 80% or close to that, right? It just went up like crazy. Let's say if a stock trading at 50 PE makes a high, kind of moves above that line, right? No resistance line, but it is already at 50p. So maximum it can go to 60p, right? You can't expect the stock to go to 100p. So valuation is also something that I look out for. If it is lower the value, the chances are the run might be a much better one. Like you can even expect a 20, 30, 40% kind of a move in that particular stock.
Right. So, Sandeep, coming to sectors like, do you see more rally to come in defense sector, or how you see is it as a, I mean, short time play, or it will be a structural play for say next 5-10 years? How you read this sector, and maybe how the screener or maybe the scanner you read, is it on your radar?
To be honest, I'm not really following the defense sector, but whatever I've read from it, Prince, the sector as a whole should do very well. But the thing is, most of them are already pretty expensive at the moment, right? Because there are very few players and all of that. What has happened is, and most of them are small cap companies, people are already giving them 50, 60, 40 kind of a P. So when you on this valuation, if there is time, I want to discuss a little on how exactly multi-baggers are made, or let's say how you make the best out of your investments. uh, is that
Yeah, please
fine?
go ahead.
Okay. So usually what happens, Prince, is many people in the market, they just concentrate on the earnings expansion, right? They say that in the next 2 years, or let's say next 3 years, the uh, earnings of this particular company is going to double. That is why the stock price should also double. Correct? So let's say it is already a 100 PE stock. So a 100 p stock is having 100 rupees EPS. So 100 into 100, the stock price at that particular point would be 1,000 rupees, right? So not thousand, 10,000, right? 100 into 100, right? What would happen? Let's say the earnings actually double. But then we go into a bear market. In bear market, what happens? The P's, they get crunched, right? Let's say the stock from 100p, now investors are only willing to give it 50p. So although the earnings have doubled, the stock price is at the same level because the p's have gone down. So how does a retail investor really benefit from it? So whenever you get a great company and it is also undervalued, Prince, there is high chance you make multi-bagger returns. Let's say the stock is currently having earnings of 100. It is only trading at a PE of 10. So the stock price is 100 into 10, that is 1,000 rupees, right? If along with EPS growth, that is earnings going to 200, plus the P from 10, now a lot of these big guys are interested. So when are these big guys really going to be interested in the stock? Is they know that it is a fundamentally strong company, plus they are doing a lot of capex and all of that. What is going to happen? They are going to start taking position. Once they start taking position, usually the P gets re-rated. So if you look at alkyla mines used to trade at 20, 15, 20p, right? And in the last 1-2 years, it has become a 8 bagger. Why a 8 bagger? Earnings have gone up only 2x, but the stock has become a 8 bagger. Like at the top, at the peak, it was an 8 bagger. So how did it become an 8 bagger when the earnings went up only 2x? What happened was the P is from a level of 15 went up to 60, right? So earnings grow 2x, P re-rating 4x, 4 into 2, you get an 8 bagger. So that is why my style of investing is looking at growth companies which are trading at a decent valuation, right? If you buy something at 50 PE, you can't expect a PE re-rating happening even from 50 levels, right? So have that also, plus great quality company, you end up making multi-baggers. No one talks about this PE re-rating in multi-baggers. They just talk about earnings explosion, right? So this is a very, a main thing that happens in all the multi-baggers that I've seen.
Sandeep,
Right, right.
just one question I have here.
Yeah.
See, there are two ways to play the market. One is through the sector, when the sector turnaround takes place. In that case,
Hmm.
of course, you make a lot of money when the PE re-rates and the earnings come. That is the the actual like real deadly combination. But tell me
Yeah.
one thing: how do you apply this accumulation distribution thing on
Hmm.
structurally moving, structurally, stocks that are in high trend? Like for example, like a continuous stage two, you can say.
Okay. So
So
in that,
yeah.
what I do, Shashank, is during that consolidation phase, right? Every stock is going to have a reaccumulation phase, wherein, let's say, it moves up 30%. From there, it kind of cools off 10%, moves sideways, and then breaks out again, Shashank, right? So what I do is, in that consolidation phase, I don't really play it. Wait for it to break out again, right? And then once it breaks out of that previous high, right, you can average it higher as
Right.
long as the stock is the 30 WMA
Hmm.
and it has gone up, let's say 30 percent, and only come back to 10% or let's say 15%, because you have bought it at the bottom, right? You are already sitting on 30% gains, so you can have a stop loss at the price you bought it, so you won't be in loss, correct? So let it retrace a little, make a new kind of a base, and again let it go higher from that level. So if you want to average it up, so the best place would be the same level which it made previously, and now it is taking out that level and moving higher. That would be the best point to average it. And once you average it, you can again move your this thing to a higher, the recent swing low, that
Right.
is the 15% retracement that it made, right?
Right.
So
So
to that level you can.
do you use
Mhm.
weekly charts in that case, or
Yes, weekly.
daily? Because
Weekly
since
charts, Shashank, because daily
yeah.
sometimes has a lot of noise in that, right? So because these stage two moves, right, they are not for 10-20% usually. If it is at the start of the bull run, right, like I said, looking at the interest rates, you would be able to figure out where, in what market we are, correct? So looking at that plus the stage two analysis, you would know that, okay, this might run 100%, 200, sometimes even a 10x, like Tata LXZ, right? So in such cases, what you'll do is, making use of weekly charts, just keep buying them as they go past their previous highs which were made on the weekly charts, and then keep trailing your stop loss.
Okay, thank you.
Yes.
Thank you, Shashank. So there is one question on. It is from Harish Kaushik. He's asking, what's your view on China-dependent APIs and generic pharma?
So generic pharma might, do well as of now because of those lockdowns, but API is more of a structural theme as of now, which is going to double in the next 3-4 years. And I think there one can, if you can understand which one is making APIs and which one is really doing capex and all of that, you should be able to make decent gains in all the API manufacturers. Generic,
Right.
I am not really a fan of as of now.
Fair enough. And Harish, you must have, there is a mega space which happened on the healthcare space, in which even every nuances was covered in detail. So you can check that at over my handle or maybe YouTube channel. So Sandeep, how we can identify fake breakouts or breakdowns so as to place ourselves better?
Yeah, so usually fake breakouts we'll talk about first and come to breakdowns. So breakouts, what happens, Prince, is if on the same breakout day, if the stock is ending lower than the breakout level, right, that is a big no for me. So I don't mind buying it a little expensive, but I'll make sure it is closing above the breakout level. Many people are in that this thing FOMO, that okay, now it is in breakout, I have to buy it now, right? I would either wait for the retest, or on that particular day, let's say from the breakout level, it has closed 2% higher. So if I buy it, I'm going to buy it there. And the stock should not close below the breakout level. That is a big no for me, Prince. If a stock on a daily chart closes below the breakout level, right, then it was a false breakout, which these guys made just to trap the retail, because nowadays you have a lot of people just trading breakouts, right? So because of which all those guys would be sucked into that trade, and these guys would move out. That is, whoever it is, big guys or operators or whoever it is, they would just dump it to them and move out of that stock.
Right.
And coming to breakdown, Prince, what happens is, let's say the stock was just moving sideways and we are seeing good volumes, right? There was no real rally in that stock, and all of a sudden the stock goes down. So in such a scenario, you can continue to hold it, right? Or else exit it and then again re-enter once that level is kind of, I mean, there has to be some level, right, which is it is going to break and go down. So if it is again coming above that level, keep your buy price or a GTT trade at the same level. Okay, if this is going to breach this, then I'm definitely going to buy it. So you won't be really making a loss, hardly a very few, even not even 1%, right, Prince? Let's say your breakdown level, or that level is 100, right? And it just breaks that, so you end up selling it at, let's say, 99, and you put a GTT trade at 100. So the next time it comes back to 100, maybe you don't make that 1% kind of a thing, but the move that it will give you, probably, let's say, 10%, 15%, like I told you, once these big guys buy something, it is usually for more than 10% gains. So it would cover that loss, that 1% loss.
So, Sandeep, is there any max or minimum stop loss, or the 7% which you talked about previously is the one you follow, and how you trail it exactly?
So okay, so 7% is the max. But let's say, Prince, there is a swing low, which is even closer to that, right? So whichever is the minimum, I am going to take that, Prince. Let's say the stock retraced after going up 30%, it retraced 10%, and it made a swing low there, and it starts moving up from there. So that will become my stop loss. So whichever is nearer, 7%, or the recent swing low, or there is a horizontal line support. So I'm not really a believer of these diagonal lines, especially in a sideways to a bear market, but horizontal line support on a weekly chart, definitely anyone which is closest, right, that would become my stop loss.
Right, Sandeep. So, Sandeep,
Trailing, like
any,
I was explaining it, yeah. So the
Sandeep,
trailing
go ahead.
stop loss, I was just explaining it to Shashank, like, as as long as the stock is making a new high, right, I would just keep trailing my stop loss to the recent swing low
Right, right.
on a weekly chart. Yeah.
Great, great. So Sandeep, any chart patterns particularly you follow, or I mean, gung ho about, or it's like nothing in specific? They
So
just happen.
the cup and handle is one which I'm extremely bullish on, Prince. Right, because I've seen this particular pattern kind of give you even 100% the kind of returns if there is a decent fundamental story also along with that particular pattern. Right, if the, let's say, the company is doing capex, and that chart pattern, that is the cup and handle, has taken, let's say, a year or year and a half. So in that year or year and a half, the company would have done capex. The capex would also have come online. So now the price has come back to the same level. And after that handle is done, usually what I've seen is 100% kind of return in such stocks. Right, like you can apply it on Deepak Fertilizers also, around I think $180 plus, and the next pattern was made around 500. So the stock touched 1,000 also. Right? So the cup and handle is one which I'm extremely bullish on. Other patterns I don't really follow, Prince.
So Sandeep, if I were to ask, like, what's the science behind these? The chart patterns, or is it like some formation comes, then people enter? Is it that way, or how exactly it is?
To be honest, I think it has become more like everyone follows that, right? So you see a lot of buyers buying that and pushing that, but in cup and handle, or let's say 52-week high is also one thing that I believe a lot in, and the cup and handle, because basically what is happening is, in other patterns, I'm not sure. You might have something on your left hand side, that is buyers who are stuck at a higher price, they might want to come in and sell. In a 52-week high, why those stocks usually outperform is everyone at that point is making money, right? So let's say a stock has touched its all-time high in its history, has touched 100 rupees. So on that particular day, everyone who has ever bought that stock is in profit. Now tell me, if any retail is in profit, how many of you would want to just book it because you are in profit? Very few, right? Usually the mentality is, you try to sell something once it starts to come down, not when it's going up. So if everyone is happy holding it and the stock has taken out the 52-week high, there is hardly any resistance there. So such stocks usually end up giving a lot of return in a very quick succession. And also, in case someone does not want to find these volume shockers and all of that, if you just follow the 52-week high setup, looking at how many stocks from which sector are making the 52-week high thing, you can try to figure out, okay, where exactly is the smart money moving, which sector are they bullish on.
So Sandeep, the market cycles are getting shortened, right? So when it comes
Correct.
to sectoral rotation, so how
Mhm.
much time or maybe how many quarters you see there are rotation patterns you observe? Or means how one can identify? Is there any time limit, or it's all
so
on
you
the basis of volumes only? How you read it?
so usually it is based on valuation, Prince. Like once a sector kind of becomes decently valued, right, that is when smart money, what it does, it starts booking out of that, and tries betting on something which is having some kind of a tailwind, and it is also reasonably valued. So once they start pushing it up, what generally retail investors do is try to get in at the end of that run, right? When the stock or the sector is already fairly valued. From there, hardly a few percentage point move would be there, right? After which the stock would just go sideways, or if the bear market starts, they would start correcting also. So I have this thing like, if you are in the market, then have three different kind of stocks. One is great quality stocks. So in the bull run, the first stocks that are going to become overvalued are the great quality ones, Prince. Then the mediocre stocks, right, which are having decent ROCs, no real capex. So those kind of stocks are the second ones to run in a bull run. And at the end, all the kachra stocks run, to be honest. Wherein what people start doing is, okay, this stock belongs to this sector. The leader is having 60p. This one is having 10p. So I should buy this particular stock because if the economy is doing well, the results posted by the Kachara stock will also be decent. So people start thinking, ये लीडर जो है वो 60 पी पे चल रहा है, तो ये वाला स्टॉक सेम इंडस्ट्री, मेनी पीपल डू दिस इंडस्ट्री पी कंपैरिजन, राइट? दे फील 60p and this one is at 10, it's a blind buy. Let me buy this kachara stock at 10p, and even if it goes to 20p, I double my money. But the thing is, वो 10 से 8 आएगा, even 6 पे चला जाएगा, 5 पे चला जाएगा, because usually these run at the last end of a bull run, and all these people start buying all such kachara stocks, and then the whole run will only start coming to an end. So valuation, first the quality names run. Usually this is what I've seen in my 2 years of a bull run, this thing that I've seen. quality first, mediocre second, and the kachra last. So when you see a lot of kachra stocks actually moving up, there is no fundamental story, nothing. You would know that okay, we are coming to kind of an end of this particular bull run.
So Sandeep, in bull run, we know the valuations go crazy, right? So is there any
Right.
upper cap when it comes to the multiples you keep, or is it like it is all about the setup and volumes and the criteria you set in?
Right. So after hitting a certain point, Prince, if the stock is just consolidating, like even if it is coming out with good set of results, but there is no movement in the price, right? You would kind of figure out, okay, these big guys are not interested in pushing the stock higher, right? Maybe they might be using these good results to kind of book out and come out of that stock and move it to different sector. So when something on the good results fails to make a new high, that is when you would be really cautious.
Right. So there are many talks about PSU banks these days.
Hmm.
So what's
Yeah.
your take? Has the
So
rally be, I mean, where you see we are in the rally which is going on this sector, and how long it can sustain? Yeah.
to be honest, I'm not really a big fan of these PSU stocks, neither the PSU banks. To be honest, the NPA trouble is not really away. If let's say we go into a consolidation phase for the economy with these increase in interest rates, right? A lot of them might start posting horrible NPA figures. So once one bank does, all of them would start doing that, and you would see a big drop in them. So many people are saying it's a turnaround and all of that. I really don't believe that as of now, right? Or maybe they might be cheap compared to a private bank, but everyone knows how the working system is in these PSU banks. So not really a buyer in them, Prince. And if someone has made profits, good for them, but I don't think the rally is going to last more, or probably we might have hit the peak as well, or maybe just for the budget thing. If I don't know, maybe some announcement might be coming in for those banks, one last rally might be pending, which might be sold into once the budget is done.
Right. Fair enough. So there are talks about the infra theme and railway theme as well. So are you tracking these, or how these are panning out?
So railways, they should continue do well, but the thing is, if you buy them at the start of the run, Prince, then you end up making better returns. Usually what I've seen is in the fifth year of the government, right, the budget, usually they won't be so bullish on the whole capex thing, right? It is more to do with the wooing the voters and all of that, right? Something similar happened in 2018 also. So if you see the infra stocks, they made a high in 2018, and since then most of them corrected in 2019-20. Most of them actually came down quite a lot, right? So during the fourth year, that is when they run the most, the PSU banks, the infra theme, right? Until the budget is done, and usually in the budget there won't be much for them, and that is when these guys kind of book out. And then that is what I have seen in the previous run. Let's see how it happens in this budget. But I'm not really, although the uh, long run you should make decent gains, but let's say if the already the infrastructure is trading at 20p 25p, then there is no much room for you to make money there.
Right. So there is one interesting question from Arun. So he's asking, if say some stock is one particular day has high volumes and rest of the days the volume is low. So how one should read it? By when we say the volumes are high, how long shall we monitor that?
So sometimes, like I told, it depends, right? If it is a guy who is a medium term guy, Prince, he has come in, he has bought it, he's not doing anything. There is no, the price is neither going up, neither going down. So it might be a medium term kind of a guy who has just come in there, right? So in such a scenario, if you want to invest, play it, looking at the fundamentals. If you are a trader, wait for the price to go up. Even if it is one day volume, high volume, right? You need the candlestick or the technical confirmation that after that is done, the stock is trying to move up.
Right, right.
But just one day volume is usually the medium term kind of guys, Prince.
Fair enough, fair enough. So there have been questions around the metal sector. So where you see the metal sector
Mhm.
is heading, and how about this sector?
So the metal sector actually, if I have to tell you how exactly to play the cycle, right, metal cycle, you look. So what happens is in all the cyclicals, why do they run up 5x, 10x? Because their operating profit margins, they shoot up like crazy. They might be making 3% profit now, all of a sudden it jumps to 30% operating profit margin, so your profits basically have gone up 10x. So that is why your stock price will also go up 5x, 7x, or sometimes 10x also, right? So once you start seeing a drop in the operating profit margin, or if you're directly linking that with the commodity, like steel prices are coming down. So if steel prices are coming down, there is no point being invested in a Tata Steel or a sale, because the profits that would be posted next quarter are definitely going to be lower than the previous one, right? And along with that, I use the stage wise analysis also, Prince, to figure out where exactly we are, right? So now what is happening is they were trying to lockdown thing has happened because China is the biggest consumer of all these commodities, right? So because of which I think it might get delayed a little, but by once the next bull run starts.
We must be joining again, guys. There must be some glitch on Twitter's part. So in the meantime, please check out our handles, and if you're liking our spaces and the knowledge shared by our guest, please check out their handles and mines as well. And also the recorded post podcasts are placed over my YouTube channel through which you can access this later. Yeah, sorry, Sandeep, you got dropped. Am I audible?
It just got dropped.
So
So
yeah, continue, please.
yeah, so I kind of forgot what I exactly I was. So yeah, the metal cycle, right? So what I do is use that along with the stage wise analysis to figure out where exactly we are in the cycle, and if it is below the 30 WMA line, you'll know that okay, it is now in stage 4, and usually these correct quite a lot. So metals, if you look at them, in every cycle they rally 100% most of the time, sprints, right? In a year's time frame, if you take up Tata Steel or any chart, right, metal chart, in a year's time frame they go up 100%, and after that they usually retrace even 50% from the top, many times, right? So based on the stage wise analysis, you can actually figure out where we are. And like I was telling you, because of this China whole lockdown or whatever is happening there due to COVID, the next cycle, metal cycle, might get delayed by a few months or few quarters.
Right, right. So coming to the cement sector,
Mhm.
so I mean, there are talks like we go election next or maybe early next to next year.
Mhm.
So we have seen in the past the sector and cement sector ought to do good because there are populist budget and infrastructure projects being declared by the government so as to
Right.
appease. So do you see any traction in these sectors?
Yeah, so they have been doing pretty well. Like if you look at most of the stocks in those sectors, right, they have done reasonably well. And I think going into the budget and after the budget, also there might be some euphoria around those mm, stocks, Prince. But that usually would be short lived, right? As you go into the election year, many people start taking out money if there is some kind of an uncertainty, right? So I would suggest not to buy something at an expensive P. So when I say expensive P, it depends from sector to sector, right? So even a 20 P in the infra sector might be pretty expensive, or let's say 30 P, right? Maybe for other chemical stocks with some kind of a moat, even they trade usually around the 30 P. So you wouldn't really call that as expensive.
Right, right. So, Sandeep, I have been getting many requests. They are asking about books on accumulation and distribution and also on the stage analysis. So,
Yeah.
if you could name out again.
Sure. So the Anna Calling book that someone else had also mentioned, right? So that should give you an idea when exactly to buy and how these operators or insiders plus the media houses they play on your sentiment, so that you can keep your emotion under control. That is the main thing while you're trading, like not to get in something with FOMO, right? You would feel like, okay, this is once in a lifetime kind of opportunity, and start buying it. So never do that, especially if something has rallied more than 5%, right? I usually don't touch that stock because you never know when the selling might come in. So I would look for better opportunities which are just about to rally, right? So that is one book on accumulation distribution. The stage wise analysis, it is a book called Profiting in Bull and Bear Market by Stan Weinstein. You should get the soft copy also online if you're having Kindle, or else you can buy those books from Amazon. So if someone reads these two, right, Prince, I mean, to be honest, the stage wise itself is very good for someone who's a retail investor and does this just to beat the FDs. To be honest, you'll beat FDs handsomely if you read just that one book and apply whatever he has told you in that particular book. Right? If the market itself is bearish, sit out. Don't be in a hurry to come in, try to trade, try to invest, right? Don't go against the market. Let the bear market end, let it be 6 months, 1 year, because ho- the worse the bear market is, the better the opportunity would be in the next bull market, right? As the P's compress, it would be more of a spring reaction, wherein from a 10p it can even go to 30, 40, 50p, right? So just stay out. Again, come in once the things start looking better.
Right. So, Sandeep, how good we are on time? I can extend till 10 if you have time, or it's up to you totally. Sandeep, you there?
Yeah,
Am
Prince.
I audible,
Yeah,
Sandeep?
yeah. So what I was saying was, it's already an hour and a half. So maybe we can have one more Q&A session after a few weeks in case people really want to ask questions and all. Right? Maybe combine
The,
it with a
the,
few
the,
other hosts or speakers, and maybe we can have a
Sure,
session.
surely, I can do that. So I do have one or two last questions.
Sure,
So
Prince.
we take that, and after that we wrap up for today.
Sure.
So supply exhaustion, right?
Mhm.
And like float cornering.
Mhm.
So would like to know more about these topics as we discussed previously. Yeah.
So usually the price action tells you that, Prince, right? So after pretty decent volumes, right? If the stock starts moving up, right? That is an indication that, okay, let now the most of the float has been cornered, and the stock even on okayish volume starts moving up, right? Sometimes it happens. Like you have pretty decent volume, nothing happened, and then on low volumes, just the stock starts moving up. So that is an indication that, okay, the most of the big buying has already happened, and now the stock is just moving up on even small volumes, right? So that is how the supply exhaustion or the float cornering usually happens. Like whenever you see a stock moving up without any volumes also, that is after huge volumes, right? That is an indication that no one is really trying to sell it, right? Even on very little volume buying or little demand, the stock is just making, I mean, higher highs.
Right, Sandeep.
Yeah.
So Sandeep, this will be purely your discretion. Any good setups you want to discuss, or obviously with a proper disclaimer and disclosure, or we can also skip that because there are
Yeah.
various requests which are stock specific, which we are not taking. But
Right.
again, if you have something in mind and wanted to share, it's purely up to you.
So as of now, nothing, because the chart pattern, right? Most of them had a very bad chart pattern because the last week's candle, most of them was a big red bar, right? So that is why as of now I am still skeptical, because today's data prince is not really that great, right? Maybe this rally might get sold into as well. So as of now, wouldn't want to really talk about the next trades because things aren't looking that great. But like we discussed, the API, the IT stocks, the chemical names, people can make use of the stage two thing and start investing in them for the next bull run.
Great, great. So, Sandeep, before we close, your view on the broader market for next 1 year, how you see things panning out on the basis of technicals?
So based on what the all the parameters that I use, right, on the especially the interest rates and all of that, Prince, I feel the next 6 months might be a little. I mean, no one really knows what is happening, right? It is too volatile because of the whole COVID situation that is still playing out in China. If interest rates start to drop, that is when usually you go into the stage one or the accumulation phase, and from there the next bull market should start. So interest rates are actually a negative for the stock market as of now because they have gone up too much. So once you start that cooling off, right, or it starts reversing, that is when I feel the next bull run should really start, and that would again go for, let's say, 2 3 years, and people should make very good money in that period. So this next 6 months we don't know whether we would crack a lot. I don't feel we would crack a lot unless interest rates go to, let's say, 6. Currently they are 6.25. If it goes to 6.75 or even 7, then it would be very difficult for the small and mid caps to hold the current levels, Prince. They might crack even 10 20%, right? I mean, I'm talking about the broader market, not a particular sector.
Great, great, Sandeep. And guys, I think you enjoyed a thoroughly insightful session, and you should reciprocate by following our guest for today. And Sandeep, also before we close, you teach people, right?
Right.
So something, if somebody wants to get in touch with you or what all is covered, so would love to know from you.
Sure. So basically, the first thing I talk about is the accumulation distribution part. Like teach people how to look at the charts and make their own decisions, not really rely on someone else. Looking at the data and when to enter, when to exit. So that is one thing that I cover, and also the market cycles. How exactly the market cycles work, Prince? Like why does the stock market rally? Why does it start coming down? So market cycles is something. Then fundamentals also I cover, like how you can really spot these great quality companies which are still at a decent valuation, wherein you can finally end up having a multi-bagger in your kitty. And the third and the last thing is cyclicals. Many people don't know, they use the same formulas to buy a investment. They use the same thing to buy a cyclical stock, because cyclicals, they go up like crazy, they fall like crazy. You can't really have a cyclical stock as investment. But many people, even on Twitter, they kind of preach that hold Tata Steel for 10 years and all of that. That doesn't really work, because if something is going to come down by 50%, it is better that you exit at the top and again re-enter it, right? So these are the major four things that are covered. And also I would be teaching them how to actually take the data and do it on their own as well, and also the screeners that are used for fundamental investments.
And one small input before we close. So for data gathering or maybe for screeners, do you use any paid apps, or it's like all free tools are at our disposal for getting your work done?
So all are free actually, Prince, right? So the data I get it from NSC. The screener is also a free thing which I use for fundamental analysis. So no paid apps, or to be honest, I don't even have a trading view paid thing, right? So hardly, I told you, right, three indicators for me. One is the moving averages, right? The second one is RSI. So, and that's it. So sometimes I don't even use three, right? I've seen people use 8 10 indicators. To be honest, it only confuses people. One is, so the data which tells you whether the big guys are buying or selling. Second is the candlestick which tells you whether the price is going up or going down. Third is the momentum. Is the momentum bullish or is the momentum bearish right now? Right? If these three things are covered, I think you're good to go. You can trade in any kind of market.
Great, great. And Sandeep, trust me, it was one of the best session we had,
Yeah,
and it was really insightful. I myself learned a lot, and I think our attendees must have got so much today. And
yeah,
they can also tell us about the feedback of the session, or maybe from the host, and anything more they want the guests to cover in upcoming sessions, maybe in the early next year.
sure.
So, any closing remark, Sandeep, before we close, and if you want to say anything about my work also, so please
Yeah, so
feel free.
it's a great thing you're doing, Prince, and I'm sure people would want to subscribe to your YouTube thing also, and listen to other people's trading methods and all of that. And it is not like one particular trading method will suit everyone, right? Depending on the temperament. So go through different trading methods, and whichever suits you, that is what one a retail investor should pick up. So you're doing a great job, Prince, by covering different people, different methods, and all of that. And definitely that should help retail investors also. And I also enjoyed taking the questions, talking about my experience so far. It was indeed a great time for me as well, Prince.
Great, great. Thank you for your words, Sandeep.
Yeah,
And trust me, like our spaces can go for 4 5 hours also. But again, in the want of time, and
yeah,
as you promised, we meet again so
sure.
that we can have basically more of Q&A session from the attendees, because
Sh-
they must be having so many questions. And as far as technicals are concerned, things change so fast, so that
True.
maybe in next 1 month we have different view. So
Sure,
with
sure.
this, I take your leave, guys, and please reciprocate in the form of following. That gives us the motivation that we are spending our time, and more people connect, we get to know more learned people, and we bring them to our forum so as to create an ecosystem of learning. So thank you, Sandeep,
Yeah,
and best wishes for your teaching part,
yeah.
and you are doing a great tremendous job, and I have been following you since long, and trust me, you made me develop interest for technicals again.
Yeah,
Thank you.
thank you, Prince. Thank you, everyone, for joining and listening. Thank you.
And guys, like I'll be uploading this session over YouTube channel, and will be tagging Sandeep and sharing over my handle. So anyone who face any difficulty, they can DM me or reach me out. I'll share the link. Thank you. Good night.
Thank you. Good night, everyone.